and Ash in a bit. He'll be here in a tick for Trading Buddies Monday session, and it is the 5th of June. So pretty much a brand new month. We just have one day. Was it 1 day or 2 days last week? Can't remember. What's the date? 5th. Oh, it had only been 1 day, 2 days. 2 days of trading last week. And let's update that in a tick. But before we do, as always, let's go and have a look at the gold chart and see what we can find for today in terms of a potential breakout trade. There we go. All right, looking at the hourly chart as always and looking for the extent of the range of Asia session. Just hang on 2 ticks and I'll get my right. There we go. All right settings. Okay, hourly chart. Let's have a look and see what's going on. A bit of a dipsy doodle today and no real surprise there, I've got to say, but the range is pretty clear. We start with that bar there. So that's the high. Let's bring that down. And the low, of course, is the current bar. And we'll bring that down and see what that looks like. We'll go a little bit wider. And we'll go a little bit wider than that. What's be fronting us or confronting us? DS1 and the weekly pivot. Weekly pivot's pretty poor reward to risk. The DS1 is not too bad by the look of it. So nearly $8 risk for 6.5 reward. We might use the daily pivot. That's double your money almost instead of the weekly pivot. We'll go that way. So if we enter long, daily pivot will be our target. If we enter short, DS1 will be our target. What have we got? About a minute and a bit to go. I think I can safely enter the long price, can't I? On the wrong account now. Trading this on a different account, aren't I? So I can track it. Right, let's go to that one. Righto, now we're good to go. Now, what did I work out? 0.1 was okay, wasn't it? That's about 0.25%, roughly. So we've elevated the status of this particular scenario. I think we've had 8 out of 10 days that have just presented us with good profits. So, and that seems to be, that's pretty much as good as it's been, but I think the record thus far with this enables us to reach out and put a bit more risk on the table. So the high is at 1949.94. Let's call that 1950. So that will be our entry for the long. And the stop loss will be the low of this bar, 1941.9. We'll call it 1941. And the take profits will be, like I said, the daily pivot. It's not telling me what that level is. We'll use just underneath it at 1959. 1959. There we go. All right, we've got the new candle. The buy is in place. There's our stop loss. There's our entry. There's our take profit. Right, let's do the reverse of that. Becomes a sell stop. And the sell stop would be, what did I say, 1941, was that right? Yes, 1941. Stop loss, 1950 on the knocker, wasn't it? Yep, 1950. And the get out point for the short is DS1. It's not going to tell me what that level is. That level is, in fact, 1935. 1935. There we go. Doesn't like that. Why? 1941, 1935, 1950. Ah, because I've got the buy limit, that's why. To sell stock. There we go. That's better. Right, so that one's in the market. G'day, Lewis. How are you, mate? Good to see you in. You been on holidays again? What a life you've got. Good to see you, buddy. Hope you're okay. Yes, long time no see indeed. All right, so that position is in place. Let's now recap on what we do have in the market. You remember last week that we traded Kiwi versus the dollar short, and we were in that for 2 or 3 weeks, weren't we? We ended here, we took profit here, and we moved our stop loss to there, which on Friday, of course, was hit. So nice trade, but we're now out of that one with 2 lots of profit. Big reversal bar there on Friday. Let's see how that pans out. I don't want to trade it. I don't want to get back into this just now because we haven't really come back to the level that I anticipated that we might, which of course was last week's weekly pivot, which is now the current monthly pivot. So I think this is a dangerous one to get back into right now, and I don't want to. We also traded Kiwi versus the yen short. This was on a weekly chart, and we got into the market here. Our stop loss was, 300 and something pips? I can't remember exactly. 380 pips. We didn't get TP1, and it's now come back on us. I've moved my stop loss down to this level here, which is less than 100 pips away from our entry. I expect that may get taken out. If that's the case, then we've lost, a quarter of a percent. It's not worth worrying about. Of course, we don't want that to happen. But if it does, I've just made sure that loser is an extremely small one versus the winner that we had on Kiwi versus the dollar. And we now have got our first take profit on CAD versus the yen. How long have we been in this? 1, 2, 3. This is our 4th week in this trade. We've had to hang tight, really, because we just missed our TP1 by a fraction. Then it came back on us. Our stop loss was here, as you'll recall. And now, finally, we've got our TP1. And I think the reason I'm in this trade really is because I thought the reward to risk was outstanding if it played out the way that I thought it would be. And that's bringing us back to this level here somewhere, around about the 76 mark. And we're currently at 68. So about 1,000 pips away. And I think we risked that candle there, wasn't it? We risked 66, 76, about 80 something pips. So I'm going to attempt to build into this. If we came back and hit the pivot or the backside of that trade line, I would look to enter again. If it broke this level here, came back and retested, I would look to enter again. And that's what I expect to happen. I expect to break through this level, come back and retest. If it doesn't, and I will be looking to trail this fairly tightly if it doesn't get through here. But I'll update you on that down the track. They're the 3 trades that we were in. Nothing has changed except that I have added a couple of positions. One is pound versus the dollar. Now, pound versus the dollar is playing a false break of this support level and also the monthly pivot of last month. At this point in time, that doesn't look to be anywhere near going to trigger, and it is on a daily chart, so I don't expect that we're going to get entered into that. The thing about the dollar, of course, is it's at a point where I really just don't know what happens next, to be honest. You'll recall that I've been calling this long since down here, and this was target number 1. That was target number 2. And look what's happened since. We've bounced off that target, come back to where I considered there would be a bounce point because of this strong level. And that happened on Friday, mainly due, I would imagine, to the good numbers on the NFP, but it has gapped up this morning. I don't know where this goes next, to be honest. I've got a double cross on last week's weekly pivot, protected by the monthly pivot. I can't trade short. I can't trade long. So I have to really, I guess, rely on what the other currencies are telling me. And the pound was just telling me, didn't whisper very loudly, I've got to say, but it was telling me that there was a potential false break here, and that's why I've traded that long this morning. There's plenty of room to take profit before the highs. There's also the hint of the 3 amigos sitting here, break and retest. It went beyond the retest, and that's why I thought maybe there's some upside here to come. As I said, it looks like that won't trigger. The other one that I'm in is also against the dollar, and it is silver, which is a reversal, if you like, of what we just looked at with pound versus the dollar. So I've got a resistance trade line. I'll go a bit wider so you can get a bit of context around this. It is in an uptrend, no question. High highs and lows, and this is now the critical point. So the critical point for mine is showing me a false break at a resistance level. So it's topped out at this level here, which is pretty clear to me. And for that reason, I think there's potential downside. Weekly chart has not given me the candle that I love, which is a decisive bullish bar. This, of course, is a spinning top, which could go either way without surprise, but it has retested the backside of this trade line, having broken through it and coming back underneath it. So also off that new monthly pivot level, I suppose, I have put my entry here. My stop loss is above the monthly pivot, if you wanted to know those levels. I'm selling silver at $22.91. I have a stop loss at $24.25, and my first take profit's going to be at $22.21. I wanted to trade gold short on the back of it is a game changer bar from last week, but game changer bars, for my money, have to be in the opposite direction of the most current price action. So in other words, I have to trade a retracement. This is a move that doesn't have a retracement. And for that reason, I didn't want to go short. I'm also trading at a support level. So I thought, no gold, maybe I can go silver, and silver showed me that potential reversal. I'm expecting gold will rally here, probably back to the monthly pivot in the first instance. So I don't want to be going short right now, but if I do see a reversal bar similar to that after a bit of a rally, then I'll start to get interested in gold. But silver's probably a decent proxy for that, I would have thought, and it is showing me that false break, as I said. I've got a stack of stuff that I was looking at, Aussie dollar, pound dollar, and gold, as I said. But there are also a lot of P reversal bars from last week that may be worth a look a little bit later. But for now, let's say good day, Nash. Good day, bud.
Good morning, mate. How you doing? How's everybody in the room? Good morning to you, Lewis. Good to have you back, mate. Yeah, doing well, mate. Doing well. I really like your CAD Swiss, actually. The Swiss have just announced some inflation data, which is showing a genuine easing back, very, very close to 2% as well. I mean, they were never really in awful shape in Switzerland. You know, they didn't get as high as everybody else, but they are easing further back towards that 2% target. So that would suggest that they probably won't have anything left to do, the S&B.
A lot of
The
central
CAD.
bankers would like to say that, wouldn't they?
Exactly, mate. Yeah, I mean, we've actually got sort of like quite insightful information this week, because we got the BOC actually reporting on interest rates
Yeah.
and what they're going to do. Likely to probably hold, and I think they probably all will actually this time round. I think that they'll probably all just see how much of the work that's been done is taking any kind of effect in the market, you know, just allowing things to kind of settle down a little bit. Not to say that they won't have to go again. I think they are at quite a big risk when it comes down to the later months of the year, because it kind of puts the ball back in Russia's court, really, because they can control some of those energy prices. We've seen OPEC Plus meet over the weekend, and the Saudis agree to cut, you know, to do quite a lot of the main cuts of production. Some of the other nations, particularly in Africa, weren't keen, because, you know, that's how a lot of their bread and butter is. And OPEC Plus, as the big power kind of coming in, saying, right, we're all cutting, and the African nations are going, well, hold on, that's fine for you guys that are already in a good position, but that's not good for us. So I think it looks like Saudis are going to shoulder most of the cuts on that one, which does also boost the CAD. You know, so this is where I think the CAD Swiss has got a decent fundamental case to be made. I don't like the area. I think where you've got in is great, and I agree with you. A little pullback would be fantastic, and it looks likely on the charts to pull back, but of course the fundamentals don't actually match that right now. So we might actually see a little bit of a boost in pound CAD, but you can see that there's a relatively strong level there.
Yep, absolutely
closing
is.
in, you know. So yeah, and what a little inverted head and shoulders as well could play out here, which would take us into the you know, the later months of the year. But because you're looking at such a long-term trade here, it looks good. And also the good thing about this one is buying the CAD Swiss gives you positive swaps. So actually, this is a good one to hold on to. You know,
we've been in it for, this is the fourth week, so yeah, we're enjoying that.
Yeah, it's great, isn't it, mate? I mean, it's nice when they actually kind of pay you for trading and not doing anything. And these are the kind of trades you want to get in. And it's interesting when you sort of consider that, because if you just wanted to make some passive extra income, then you really do want to look for the likes of the CAD versus the Swissy, or the dollar versus the yen, the pound versus the Swissy. You know, you kind of put them in that basket. Now, of course, the charts and the fundamentals have to match that particular way round. And in this one, it looks like, you know, that is playing out. And as I say, a pullback to that trend line, give us an inverted head and shoulders. I think that's going to make a lot of people really interested in buying the CAD Swiss, particularly with what we've seen today.
Hope so.
Yeah, that looks good, mate. And I also really like your silver trade as well. And I think it's with the dollar, it's quite interesting, because the pound I would have suggested is probably the one to short. You know, I wouldn't want to go long pound dollar. I think that the pound is probably the one to short. And the reason for that is that the UK has seen inflation higher than everybody else for much longer. And that suggests that there could actually be a real, you know, a genuine move lower very, very quickly. And if that's to happen, you know, and a lot of the central banks are putting pressure on the UK, the BOE are actually quite dovish, you know, as a kind of unit, they're quite dovish. They've been forced into the position that they're in. They're not like the RBNZ that are quite happy and keen just to kind of front run everybody else. They've been hoping really that they didn't have to move in quite the same way. For whatever reason, maybe it's down to mortgages. I don't know, but I don't fancy the pound. I fancy the pound for some further downside, and I fancy it particularly against the Aussie or the CAD. But I think it's also probably going to weaken against the dollar. But that does put us back into that dollar Swiss, the dollar silver trade, and I quite like the hedge with it as well. You know, the fact that you have gone long pound dollar and short on the on silver, because if the dollar is to strengthen, then you're not going to get taken into pound dollar, and probably vice versa. If it's going to weaken, you're probably not going to get taken into the silver trade. But I do see silver coming down. It struggled a bit, and I also see gold starting to ease back. But if you think about the drivers for gold, it tends to be really good, obviously, in inflationary environments. We're seeing inflation just ease back a little bit. Not enough, but it's easing back a little bit. So maybe that's weakening the position. But the other thing that affects gold is that 10-year, the 10-year yield, and we just need to
Can't
keep
show
an
you that
eye on
one.
that. You can't show me that, no. But the 10-year yield is kind of, I think that there might be just some convincing now in the market to suggest that the Fed aren't just going to cut. They're going to get there and cut. You know, I think they're going to get there and hold. And I think a lot of people are probably starting to come to that same conclusion, which suggests that the 10-year can at least stay buoyant, which does kind of make the case for some weakness in gold and subsequently silver. So I think some of the fundamentals line up quite nicely for what you're doing.
That sounds good to me.
Yeah, I like those. Interesting as well when you kind of look around at the markets. I'll just grab the screen briefly here, mate.
Sure.
You look around at the indices. Yeah, sorry, mate. Go on.
Squeeze telling me reference to you on the pound. Perhaps we can also look into pull back in pound CAD to short. Yes, you mentioned that as well. In light of CAD Swiss having good potential upside too. Yeah, it's only potential at the moment, but we're off to a good start, Sweet. That's true. And as Ash said, we've been in it for 3 or 4 weeks, getting paid to be in it, which is wonderful. And I think it's got a long way to go. May not happen, but if it gets a roll on, I think it's got a long way to go.
Yeah, I agree with you. And actually, interestingly, because the Swissy has got very low interest rates in comparison to the rest of the globe, and we're seeing that inflation data potentially show that they may not have any further to go. Really, if you can get into a CAD Swiss, or if you can get into a dollar Swiss, I mean even a euro Swiss, but you know, I wouldn't want to make the case for that one. But if you could get into those ones that are giving you the better spread, then you get paid on the swaps, which is fantastic. You know, just kind of like make it. You won't get paid a lot, but you'll get paid some. You know, it's like getting interest every day, and that'll mount up if you can hold on to the trade. That'll mount up, and you've got the capital gains, if you like, as well, with the appreciation of the actual price. So the CAD Swiss and dollar Swiss make a lot of sense, and you can see sort of, you know, why people would get into that and hold on to it, because the fundamentals are pointing to some stabilization, and of course, if they all stabilize, it still promotes the likes of the CAD Swiss and the dollar Swiss purely because of that free money, without having to do anything. So yeah, I think great trade that one, mate. These are the indexes. This is the Nasdaq. So the Nasdaq, it appears that it needs to pull back somewhere around about the monthly pivot, maybe even a little bit lower. It looks like it's keen to pull back. Where it pulls back from is the slightly tricky thing. Could be under this area here. You can see a little bit of a point there. There's a little resistance point potentially because of this bar as well, right on top of that. So it could start to pull back from this point here. It may be a little bit higher. Might decide to kind of go from that point, or probably that point looks even more likely. But you know, it could go all the way up here before it just decides to pull back, because the story of AI, and that is going to be another 10%, and I wouldn't like that 9%. Maybe I wouldn't like to get into a Nasdaq long here, because you can see there's just no support. You know, this is what the Nasdaq can often do, where it just, like you can see it here, it just flies and flies without any real support underneath it, and subsequently just when it rolls over hard. So I don't think this is the best point to be getting into a Nasdaq long, but interesting maybe for a short. The AI story has really boosted some of these stocks in the Nasdaq, and I think that the debt ceiling talks as well.
On that point,
yeah.
On that point, where has this come from? I mean, AI has been around for a little bit now. Has there been a sudden advancement in AI that I don't know about?
No, do you know the main thing I think that has driven the AI stocks in the Nasdaq has been Nvidia's reporting. You know, they have just smashed all expectations because they've been making the components to kind of support the AI systems. And
Okay.
I think they beat Wall Street estimates by like 50%. They just smashed it up. There was just kind of no coming back from it. So that particular stock flew. Now, of course, the eventual outcome for that is that the chances that they continue to grow at the same pace will diminish as time goes on, because things will be implemented, and also I think that if with the debt ceiling kind of getting sorted out, that kind of like added some extra kind of excitement to the Nasdaq, where people went for the big companies just as a kind of safety net. But growth can come back into play, particularly if the Fed at least pause. But probably if they raise again, then you're going to see you're going to see some of these companies that need that kind of extra liquidity. You're going to see those companies probably just roll over a little bit. But Nvidia was the one. Nvidia just led the charge, and it's just been astonishing, really, and it suggests that AI is going to be implemented a lot faster into the systems than maybe people initially thought, or it already has been. Maybe already has been implemented a lot faster than people initially thought. So I think that's the narrative. I mean, that's the story with AI.
Yeah, everywhere I look, I see AI this, AI that. Are we worried about AI? Are we terrified that we're going to be overtaken by the machines? Wow, it's all happening.
Yeah. Well, mate, it is all happening, and I suppose this is where the challenge comes in, to kind of cut through the noise and cut through the headlines and the fear, over fear, really, and really sort of like try and find out what the truth is, because it is undoubtedly a worrying prospect. What faces ahead of us when this stuff kind of gets into the wrong hands, which it inevitably will do. But is it quite as worrying as been reported, or is it just a great story? I mean, it's very, very difficult with any of this stuff. It's very, very difficult to recognize what the truth is.
It is. You know how we often talk about, and we went through Brexit, and we went through Trump being elected, and we've been through COVID, and we keep saying, "Wonder what's next? What's the next big thing that's going to move the markets?" Yeah. Well, maybe it's these machines. I don't know.
Yeah. Well, I think it is, mate. And I think what's interesting about that is if you kind of got in early, and it's still probably relatively early, if you get in early on cryptocurrencies, you make a whole bucket of cash. I think the people that are getting in early on this AI story, which I still think that one of the reasons that Nvidia managed to kind of boost so highly and stay there, they've come back a little bit, but they've managed to kind of like pretty much hold their price point, is because I think people are still seeing this as an early story, and it'd be one of those things that over the next 12 months, anything involved in AI, just like anything involved in crypto, no matter how good the product was, will surge. So I think people are now looking around for that stuff, which of course boosts the Nasdaq. And we're sort of like starting to see that play out. So I think Nasdaq looks good, but it could do with coming back. You'd need the Nasdaq at minimum, the monthly pivot. This area here would be another price point to try and get in at, and of course down here where it's really come from would be the price point. But that in itself has already run 9%, so it's already had a 9% run to the upside without any breath. When you look at this on the weeklies, no week has been down over the last three. It does suggest that we're going higher. But we could do with some relief, and I think the Nasdaq is in that overbought and overexcitement kind of phase. Looking at the FTSE also looks like it's probably got some upside to go as well, probably to this point here. Of course, with OPEC plus cutting their production, that starts to boost the likes of Shell and BP.
Sorry, remind me again. I hate to keep interrupting, but what's the plus part of OPEC?
I think OPEC was initially four countries, and the OPEC
they've added somebody.
They've added some, it'd be like the Eurovision Song Contest has added Australia.
Exactly the same. Yeah.
Yeah. So so the plus part is the extra countries.
I can see the correlation. Yeah.
Yeah. Yeah. But this does potentially boost the FTSE, and you can see where we are. This is it a strong resistance level? It's a resistance level. I think it's difficult when you use the word strong because it suggests it's just going to come straight back again. But it is a resistance level. We'll know if it's strong if it fails here. But we do have some resistance here. What's going to drive it back down again is the question, because we've had that kind of bullish news from OPEC, and you can see with WTI gap up this morning. I think people are going to be sort of like quite keen to also get into this. It looks like that gap may well provide some support. Do you kind of get the technical level that it would normally test? Maybe, but you might not, because the story is very very bullish for WTI, and everybody knows it. So I think this is one of those things that you almost can't be too early on. You just get in and maybe have to have some wide stops.
Actually disappointed I missed that, because there was a lovely double bottom and higher low.
Yeah, there is, mate. Yeah. Lovely double bottom there, and it looks like it's through here as well. And actually you can see there that is the support level. So it looks to me like that is a genuine kind of. Yeah, that's had a little bit of a bounce off that point as well. So this looks like a decent trade. You could even put your stops all the way down that point if you want to be a little bit safer, and it's probably going to get at least a 1-to-1 from that, but it may well even go back to these highs now. So if you're looking at 30 down, yeah, I mean there's still a decent 3.5-to-1 trade just to get back to these highs here, which, as I say, it looks like it may well go. Maybe people want to see this hold for a day above these particular levels, but I think you could probably scale into this quite comfortably with stops down here. If it falls again, try and get in. You wouldn't want to see a kind of slingshot setup where it comes down and closes, then tests, and then starts to look a bit ugly. But I think that's well worth a punt at 3.5-to-1 from this particular point. So that's where we are, mate, with the markets. Aussie as well, notably very strong seasonally this week. So
interest rate announcement tomorrow. That will be interesting. I don't know that that's going to be anything but a hold.
Yeah, agreed.
Tough to say though. The figures can't remember what the figures were last week, but they suggested that there may well be a little bit of a chat about another rise. But I mean, like so many others at the moment, the Fed not the RBA are suggesting that we're going to have a rate cut by the end of the year, not a rate rise. So if that narrative continues, then you expect them to hold tomorrow for sure.
Yeah, for sure, mate. I agree with you, and I think they all do hold next time round. I think that there's. You never know. There's always going to be. There'll probably be one or two that possibly surprise, but I think that there's a decent chance that the RBA, RBNZ, BOE, the Fed, even maybe they might be the surprise package, but even the Fed, ECB,
this week as
S&P, yeah, I think they all BOC. I think they all potentially will go for a hold for this particular period, but I don't think that means that the rate hikes are over. I just think that they want to see. What's really happening, because what's interesting is that we've been focusing on the jobs market for a long time, suggesting that it's the jobs market which are going to drive the central bank's decisions, and that's what we need to kind of weaken before we see inflation come down sufficiently. But inflation has been coming back, and the jobs market hasn't weakened. So it might be that we're in a bit of a different and a market that people just don't fully understand and don't really get right now. So yeah, it's possible that that the work that they've been doing is going to bring us closer to that kind of 2% target without having to go through too much pain. PMIs from both Japan and Australia today were relatively positive, maybe weaker than expected, but both above 50, both showing growth. We haven't really seen that recession, those recession fears manifest. And this is the whole point about a story, you know, these headlines. You know, it was all about recession really for the last 6 months, and yet we're just not seeing it. So you just don't. It's very difficult, as I say. It's very difficult to kind of wade through what are the lies and what are the truth, and what's a headline and what's excitement and what's fear and everything else. But when it comes down to it, the data, as it's reported day to day, week on week, month on month, that tells you what you need to know. And right now, the market is the global economy is under strain, but it is not collapsing.
Not bursting.
Not bursting. Yeah. And people need to front run it, of course. You know, you need to front run what these stresses turn into. Because if you don't front run it, then you don't get the best possible price, which is why, you know, the speculators will move on some of the numbers. But so far they've been wrong on this one. We'll just have to see. Is it just that it's been kicked down the road? I mean, the US debt ceiling provides almost another story of how they now raise cash, and we could see a lot of bonds kind of come into the market, you know, from the US. So I think there's some dynamics which may well play out and change some of the perception of where we were before. But it looks relatively quiet today anyway, mate. This is the pound Aussie right on support, so we might see a little bit of a boost up. But I'm looking really by the end of the week for it to be at least down here, but potentially through this area on the pound Aussie. I'm still looking for some weakness of the pound.
Okay. If that comes before it enters my long, then I don't have a problem with it. But if it comes before, I probably do have an issue with it.
Yeah.
No George today. He's actually, I don't think he's that flash in terms of health-wise.
He's what?
I don't know if he's got COVID or he's just got the flu or something, but yeah, I don't think he's that good. But anyway, he won't be with us today. So I might have a look at the 30-minute euro dollar chart just because.
Yeah, let's do that, mate. Let's have a look around, see what the shorter term prospects are. Because the FTSE is normally a bit of a short term prospect for me, but I like the long with the FTSE, but it's just that area, you know. Would you kind of want to get in long? It's been very, very bullish to this point. And it looks good for another push, but it's just a little bit high. I think it's a bit too risky at this stage to kind of get into the long. You want to see it pull back, maybe monthly pivot, daily pivot, and then try the long. But the narrative is definitely go buy the FTSE this morning.
Okay, you recall a couple of weeks ago, or was it last week? I don't even know when it was that I pointed out this chart, and I said if the monthly candle closes as is, I would place a buy order above it.
Which one's that? The FTSE?
This is the euro versus the dollar.
Oh man, we're not on yours yet.
We're not?
No,
tells me I am. Yeah, I am. Yep.
I've crashed.
You've crashed.
It always crashes. My voice stays for a little while, so I can tell you I'll be back in 2 minutes.
Okay. We'll see you in a bit.
Thanks, mate.
So, as I said, last week or a couple of weeks ago, I said if the monthly candle closes as is, which it pretty much has, that I would place an order long above the euro dollar monthly candle and a stop loss below it. Well, I am going to do exactly that. Now, this will be costly in terms of, Sweet, are you seeing my chart now? Because it's going out to YouTube. I'm watching it on YouTube. That's how I know. So somebody should be seeing it. Anyone else in the room not seeing it? Still seeing the FTSE. All right, let me reload again. It says my screen share is loading, yet I can see it on YouTube. That's bizarre. I'll stop it and start it again. Righto. How now, brown cow? That looks better, huh? Still there on YouTube. Okie dokie. Awesome. Righto, so let's try that again. as I said, if I saw the monthly candle of last month close as it was, which is pretty much exactly what's happened, I would place a buy order above it and put my stop loss below it. And the reason I want to do that is because I see massive potential upside here. Minimum to there, which is, depends how long it takes to get there, of course, about 2.5 to 1. Let's use that horizontal level, makes it easier, right? So that's minimum for me, round about there somewhere. Then I've got this level here, which is another, what, 500 pips or something, 400 or 500 pips. Then I've got this level about here somewhere, which is another 1,100 pips. Then I've got, like I said, do I expect this to happen in my lifetime? Maybe, maybe not. But I'm thinking 150 isn't out of the question. I really think that is a possibility. And it's very, very easy to say without putting any money on the table. So I better put some money on the table, right? Will I stay in that trade for that duration, which could be 5 years, right? Answer no, because it'll cost me a shit ton of money to do that. The holding costs would be too good, too great. But what I can do is, even at the end of, I don't know, every second day, I can close the trade and start it all over again. Therefore, I don't have any holding costs. And on one of my accounts, I don't have any holding costs anyway. I don't have any swaps. They don't exist. So on that account, I don't have to be concerned. But on this account, and I won't place it on this account. I'll put it on the other one. But like I said before, the upside potential here is enormous. And my belief that the dollar will crash at some stage just adds weight to this. So I see, as I said, 150, not entirely off the cards. After all, it's only, what, 14 years since we were there. When I say only, I was trading at this time, right? So I know that euro dollar can trade at $1.50. I've seen it. So there's no reason why that can't happen again. So that's why I'm happy to take that position. Today, am I thinking that? I'm thinking long, to be fair, but that's primarily because we have an untested daily pivot above us. It's Monday, so I don't expect price to go too far away from the mean, if you like, and this would be a reasonable trade back to the mean. There's a big profit in there on a small time frame. So where we are right now, what I need to see is price do exactly as it is, consolidating underneath this trade line, then shoot back up here, maybe come off the weekly pivot and hit the backside of this trade line, and then I've got to trade to the daily pivot. I'd like to see the weekly pivot broken, to be fair. So candle up here, close above the weekly pivot, then come back. That would be my trigger to go along to the daily pivot. So keep my eye on that. Do I want to trade it short? No, I don't. Is my short term, or let's call it medium term, let's go to the weekly chart, is my medium term long or short? Well, if this channel means anything, and I'm not in love with the channel, to be honest, because it didn't quite fill it. But maybe if I squeeze this back to here. Nah. Yes, it's not that pretty, I've got to say. But in terms of a trend line or a trade line, then it does look to be at a support level. I'd have to go down to the daily chart to find that, to be honest. But there you go. So that's what I'm seeing on the euro at the moment. And if we do use that channel, we're bouncing off the bottom of it as well. That red line is the one in question, right? The monthly one. If we get back above that, happy days. But there's tons of room to trade that short to medium term up to that trend line. So more than happy to go along the euro at the moment. The dollar index, of course, the reverse side of that, and I said that early, I have no idea which way this is going now. To me, it's here or there, here or there. Maybe consolidation until something happens. But this range that I chose some weeks ago still tells me that there's potential upside here. So not that happy to trade against that at the moment, and I'm not happy to trade with it either. So there you go. I've got a pound dollar long. I'm thinking euro dollar long short term, and as I said before, that other potential trade on silver may be a good hedge on both of those. We'll see.
Yeah.
So that's kind of where I'm at with the euro, mate. What are your thoughts? Euro long term.
I don't like the euro. I think that there's still probably some downside with it. I think the ECB.
So you think I'm a nut too, right?
Well,
everyone else does.
Yeah, you're looking against the dollar, aren't you? Which is the kind of interesting dynamic.
It's a dollar play. It's not a euro play. Right?
Yeah, and this is I think if you were if I was thinking about the currencies that I would like longer term, then the commodity currencies kind of are the ones that I would kind of lean towards. I find the dollar just kind of, it's had a decent boost, the dollar, and it's obviously kind of always going to be the currency which sticks around. Well, I say always, for right now, it's going to be the currency that sticks around. So whenever it does come down very, very low, it's at this stage likely to get some buying interest. But I don't know whether it would be because the economy is so incredibly strong that's why we kind of continue to buy the dollar. I think that the US economy still has some potential stresses. It's held up really well, surprisingly well actually. So there's not really a case to be made right now for a dollar short. But I think there are some potential headwinds. But I also see those with the euro. I think there's lots of potential headwinds, and it's almost like the bigger guns, if you like, with the euro and the dollar as the two, most, I suppose, highly traded currencies, may well be affected. No different to when you look for stocks. There are the bigger companies, just like the ones we saw with the Nasdaq, and then there's the value play. So they tend to kind of seesaw. I wonder whether these two big currencies right now are the ones to possibly look to go against. They almost sit in the middle, right now. The euro and the dollar. They're not particularly attractive, and they're not particularly negative either. So I don't particularly like the euro, if I'm honest. And euro dollar might be a bit of a coin flip for me. I'd probably edge towards euro dollar short. I think the euro is probably the one that I would go against, mainly because the economic data from Europe isn't anywhere near as solid as it is in America, which is one of the reasons that I would probably look to the euro or the pound actually, and also with winter coming, I still think that those two currencies could get quite badly affected because of their geographical location. I wonder whether both the euro and the pound may well weaken against the likes of Australia, New Zealand, and Canada, because they're just a bit more self-sufficient. I
don't mind that theory. That works for me. The thing with the dollar is, here we go again. They're in more debt. They're prepared to go more into debt, as they've just told us.
Yeah.
You've got BRICS working against them big time.
Yeah.
Everyone, is trying to get out of the dollar as a reserve currency.
Yeah.
You've got idiots running the place. Apparently, I can't speak to that, but every broadcaster I listen to is telling me they're all idiots. But I don't know. As I say, I can't speak to that. And it just doesn't seem to me, and I take your point about the economy bubbling along okay, but to me that's a mystery as well as to why that would be the case. There's all sorts of turmoil internally in terms of even civilly, you know, everyone's against each other, which is not unusual for the United States of America. We've seen that before, of course. You've now got a potential criminal president or president, would-be president for a second time.
Yeah.
If that happens, we're going to see, in my mind, more unrest. And if it doesn't happen, we're probably going to see unrest anyway, because he'll say it was rigged again. And here we go again. If that were, I don't know if he'll ever win pre-selection, but at the end of the day, we were saying this, 7 years ago? No, it can't happen. Can't possibly happen. He couldn't possibly get to the White House, weren't we? I mean, everyone. Yeah. Except, well, there were a few people giving it a good shot, but I just don't see the American dollar has really the right to be where it is right now. That's in my mind. It maybe not on paper, and there may not be a good reason for it, but I think there are a few good reasons for it.
I think you're right. In my own mind. I think you're right, and when it's obvious as well that you know that the dollar is kind of over, it'll be too late. It's one of those things that you sort of look at it now and think, well, it appears that there are problems down the line. They're coming down the line, which is why, you know, when you sort of like think about the currencies that you'd want for genuine safety, if there is growth on the planet, well, I mean, the dollar the US could really affect that. But if there's enough growth, then you really want to go to the places where, or even if there's not actually, you want to go to the places that are self-sufficient, that the countries that make stuff, or at least kind of like mine the commodities to make stuff. Which is why I think the Aussie, the RB, the Kiwi, and the CAD are quite attractive places to kind of, you know, be parking some cash. When it comes down to,
and I know it's not a mainstream currency. What about the Indian rupee?
Yeah, well, yeah, very good point, mate. Yeah, I would agree with you. I don't.
That's a super emerging economy.
Yeah, yes, it is.
Time.
Yes, it is. Yeah. Well, I've never really looked at that as a.
No, nor have I. Nor have I.
And you can only really trade. Can you? What's the ticker on that?
I don't know.
INR.
Yeah, what's it telling us? Show us.
Let's have a look.
As usual, the gold trade has triggered, has it? It has. Cool.
Yeah, very, you know, quite a broad range going on. It looks like it's closing in a little bit here. Looking at that, yeah, it looks like we are closing in a little bit, mate. This is interesting. So this is dollar rupee. So a break either way.
What's ascending triangle? Wow, look at that.
Yeah, it's quite something. So a break either way, depending on when it happened.
Sorry, I can't see the whole chart. How long's that been going up? What's the date where that bottom is?
This one here?
No, the ultimate bottom on the extreme left.
Down here, that is March 2022.
Have you got any history beyond there?
Yes. Let's change it to a monthly. Oh, actually, no, I don't. Yeah, actually, this one here.
Wow.
That's 2017.
Okay.
So that's when the dollar's, you know, weakening significantly. Lots of gaps with this one as well. Actually, look at that gap. I mean, we say gaps are to be filled. I mean, you know, that does kind of scream at $69. That's it's 70. Yeah, 69. It is. It's down there.
Got a bull flag there.
There's a there's a bull flag, but this is dollar rupee, so that would suggest the dollar's going higher.
Oh, okay. I'm in the reverse mode.
Yeah,
Interesting.
that suggests it's going
It does
up to
suggest.
there, which is 85.
But if it can get a foothold, wow, it's got a long way to fall.
It has got a long way to fall, and as I say, that gap is a huge problem. And it's a
Okay.
big problem.
I might have to look in my accounts and see if I can trade that.
Yeah. Yeah, and I'd have a really good look at this area here. You know, the $69. Make sure that gap is not just a broker gap, and it actually does exist. That was back in 2019 in August 2019. But yeah, interesting one to look at, mate. Definitely. But you just wanted to break out of this range, don't you? That's the key. It breaks out of the range, then you got
I want to see it blow off top. That's what I want to see.
Yeah, well, that would be something of use as well. Yeah, up here. I mean, certainly, you know, I suppose if you saw some short-term time frames suggesting a short on these areas, it depends how long it's going to go on for, but it hasn't got much further to go. Another year.
I'd be happy to trade that short off a double top or something.
Yeah. Then you could be in a really good one. Yeah, certainly if you like the dollar. Yeah, the rupee. You know, I don't know the dynamics of the rupee. You see, I don't know how they manipulate their currency.
Yeah, no, I've got no idea either.
Because
might be worth a thought. Do you think?
Yeah,
researching it a bit.
You're not never looking at just the fundamentals of this stuff. You know, if they peg it to something else. Yeah. K-phone. I don't know who that is, but yeah, it's come as K-phone.
That's Catherine.
Oh, it's Catherine. Oh, sorry, Catherine. Catherine. So yeah, rupee so weak. Yeah, for so long. Interesting. It's been up since 2022. Well, down actually. If you like. Oh no, I see what you're saying. Yeah, up. Yeah. If it's had some strength, just holding the dollar here since 2022. Yeah. Yeah, you know, it is an interesting one, isn't it? Maybe, you know, as it gets up to this point here, you start to look for some lower highs on a 4-hour or an hourly. You might well catch an absolute cracker with that one if that is to weaken.
I might have to flop from the euro dollar to dollar rupee.
Yeah, do you know? And I would look at the two things.
I wonder what the holding costs on that are as well.
Good point, mate. Yeah, good point. Where are their interest rates? And also, the thing to look at with that, I'll have a look at where their interest rates are. The good thing to look at with that is the seasonals. You know, what's the seasonal kind of bias with the rupee? Because we know that that it's the buying in India does affect the price of gold. So
yes,
what does it do to the currency? That'd be something to look at, I would suggest.
Have you done your seasonals and COP this week or not?
I have, yeah, I have, and they are suggesting looking at the Aussie very closely. Certainly the seasonals suggest looking at the Aussie very closely for a long. Short, I think it was, I'll have to bring it up just to kind of remind myself. There we go. Yeah, short. Nothing stood out as a short. The pound actually a little bit weak over a 15-year period. It was okay, but it's still weaker than the Aussie. So yeah, CAD as well. So CAD long, Aussie long is the seasonal bias with a short on the pound and the euro.
Okay, I'll give you potential trade on the Aussie before we go.
Yeah, cool stuff. Historically, rupee weak as with my firm. Oh, really? It's okay. Whinging about their performance, the strong dollar. That's really interesting. Tell you what, Catherine, you may be the one to give us a bit more insight on the rupee. Maybe we'll have a 10-minute session on the rupee every week, Jeff, until we see this this play out.
Why not?
Get Catherine to come and give us some insights.
Well, I mean, there's no economy on the planet that's positioned to improve, in my mind, like the Indian economy.
I'm
They're
guessing.
going,
Is it?
going for it.
Now, what's the name of? Oh, yeah. So Reserve Bank of India. So their interest rates are at 6.5%.
Okay.
So you're
So
going to
it's
get
not that,
positive
not,
swaps on that one as well. You know, the only
yeah, nice.
yeah, you're going to get some positive swaps on that one. So Harry Dent's favourite. Oh, that's good. That's quite good to know.
Harry Dent's favourite what?
Currency
Oh, okay.
or
Yeah, it makes
currency
sense.
pair. Is that Phil? A Harry Dent's favourite currency pair or? I'll have a look into that. That's really, really good to know.
Guys, if you can,
Yeah.
when you put messages in, could you direct them to the whole room instead of direct messages? Please, that would be great so we can all see them.
Yeah, so
I
just
know.
change your thing to everyone.
Yep.
We should probably do that at the start of the show, shouldn't we?
Yeah, but it changes. You know what Zoom's like.
Oh, it's no option to
I,
send to everyone. Why is that? What's going on with Zoom?
oh, actually, I don't either.
Oh,
That's
Phil's saying
bizarre.
India in general. India in general. You have to change the setting as the host. Okay.
Oh, that'd be me, right?
No, do you know what? I accidentally grabbed host from you at the start of the
Oh,
thing.
did you? Okay,
Yeah.
good. You do it.
All right. No problem, Phil. No worries. I don't know how you do it from this end, but we'll have to see if we can figure that out. Yeah, I don't know. Yeah. I won't waste time on that. Anyway, mate, we're probably ready to push out of it. But no, you had something to tell us. You had something to show us.
Just the Aussie versus the dollar.
Yeah.
Let's have a look at that quickly before we go. Share that one. Oh, I've lost control here. Share. Cannot say. Oh, you've got to give me permission now. What have you done
Oh
to
no.
me?
I don't actually know.
I've been excommunicated.
Let me see. Make host. There we go.
Right. Cool. And that would work now. Brilliant. Okay, so with the Aussie, and you're going to have to be kind of super lucky on this. And what I mean by that, I'm not suggesting that the direction has to be lucky. You just timing has to be lucky because you've got the RBA tomorrow. You've got a very strong signal here, in my humble opinion. If today's bar closes bearish, and better still on that trade line, but certainly bearish across the monthly pivot. And if that were the case, there's an entry above that bar tomorrow. And yeah, wherever you want to take your risk, you could use the bar, depending on where it closes, really. Underneath the weekly pivot would be a good spot. But you've really got to be in the money before the RBA, or put your risk down here, one or the other. I wouldn't be prepared to do that, but I would be prepared to trade that bar if it is bearish, and in particular if it retests that trade line or the weekly pivot. I think that would be an excellent opportunity, but getting into the profit area before the RBA is going to be the timing part of it. So keep your eye on that. Maybe you can pick it up on a 4-hour chart if it does play out, right? So if that is a bearish bar, go to the 4-hour chart and see what you can find. You might be able to find a false break of support or a break and retest of resistance or something like that. You've already got the right to trade it because you've got a bullish engulfing bar here. In other words, a reversal pattern. Here's exactly the same thing, right? See how that played out? Break, back above, retest, way it went. Daily chart, it's exactly the same scenario. Break, consolidate, back above. It's the retest that we're looking for now. And if we got that, then I can see this going but you've got to be very aware that the RBA statement is tomorrow. Now, it's tipped to be benign. So if you're on a daily chart, you're probably going to be okay with a reasonable stop loss, maybe underneath the weekly pivot. But if you're scared of it at all, don't go there. But you may be able to pick it up on the 4 hour as well. If you can get into profit before the RBA, brilliant, even better. So I will leave it at that. Euro hasn't set up for us, I don't think. We have new candle. No, nothing yet, but waiting for this to get back above here, retest, away you go, up to the daily pivot. That's all I got.
Cool, mate. No worries at all. Incidentally, you were asking me about seasonals, NASDAQ and FTSE just heading into a relatively weaker position this week as well. So something to kind of keep in mind.
Okay, so we're looking for Aussie long. That's the best of them.
Oh yeah, Aussie and CAD.
Aussie and CAD.
Yeah.
Happy days. We're in the CAD, so just got to join up with the Aussie if it takes off.
Yeah.
Very good. All right, mate. Thanks for being my trading buddy on Monday, as always. And we'll do it all again on Thursday, shall we? Just for kicks.
Let's do it. Yeah, just for the kicks.
And
yeah.
Phil will be joining us as well. And I wonder what he's got conjuring up for us for Thursday. Could be interesting. Have a great week, everyone. Thanks for being our trading buddies, and we'll see you on Thursday. Hooroo. Bye-bye for now.